let's officially begin. You guys all ready to officially begin? Welcome to today's webinar, How to Generate Income Using Credit Spreads. It was great getting to know you in that little pre-webinar time frame that we had. My name is Brian D'Amico. I am very excited to be here with you today because credit spreads are one of my favorite trades to not only do, but teach about. They're fun to do, fun to teach about, and they're also something that, as you'll see as we go through today, something that can help you not just have fun, but generate income. All right, so it's great to be able to talk to you about them today. I'm going to give you everything I can for this next hour. All right, we'll be together for about 1 hour today. Everything that we're going to go over today is based on real results, right? It's not just some back test that we think might work. It's from years of working with clients. By the way, I work for a company called VectorVest, who are getting tremendous results. So it's not theory, it's real results, tested, done, and so it works. All right, so we got a lot of information to cover today. So take a lot of notes, ask questions. Like I said, John will be in the chat box answering you throughout today's session. At the end of today's session, what I'll do is I'll show you how you can get some more help from us, right? Especially if you want to start to get some faster results. There's a way to do that. But for this next hour, you're gonna get a ton of information. Okay? So if you're good to go and you're ready and pumped up in the chat box, just give me one more big yes. Let me know that you are alive, you are ready. I see yups, yeses, tons of yeses. Perfect. All right. So one of the reasons I love credit spreads and that we hear from our clients on why they love credit spreads is because it's a way to help them with recurring bills. I think we all have them in one form or another, whether it be like a mortgage, it might be a cell phone, it might be a car payment, whatever it might be. There are these recurring bills, and we hear from a bunch of people before they start doing and implementing these things that they're worried that they might not have enough income, right? And maybe you might be one of those people who fear that maybe you're getting to where you're over 65, you're going to retire, and you're like this, like CBS had a news report why more Americans over 65 still have to work, and you're afraid that you might need to be one of them. All right, so you're in the right place because this webinar is going to show you how to generate income so that way you don't have to keep working forever and ever. All right. I'm going to put up a poll. Usually I have this poll that you can actually click on something in the webinar, but let me just ask you just very quickly. I want to get an idea of who's in the room with me. Just in the chat box, just give me like a 1, 2, 3, or a 4. How would you rate your experience with options? Number 1 is no experience. 2, you're a beginner. 3, intermediate. And 4 is like you're advanced. You know how to do all different types of option trades. All right, I'm primarily seeing 1s and 2s. 1s and 2s. I'm seeing 3s in there. I maybe saw 2 or 3 4s that flew through my screen, but I'm seeing mostly no experience and beginners, and then probably about 20% maybe intermediate. Okay. All right. Those of you who are in that beginner to no experience level, I want you to write down 4 words. And I ask you to get a piece of paper and pen. And I really do want you to write down 4 words on that piece of paper. I can do this. Really, write down, I can do this. Because you can. You definitely can, and you should. If these are trades you definitely can do. Don't be afraid because they're options. It's a trade that you can generate some steady income. But please, I want to talk about the elephant in the room because a lot of you who have no experience or limited experience, I saw somebody type it in just a moment ago. I think it was John just typed it in saying, I always lose on them. Because a lot of people think that options are risky. They're complicated. That only professionals should be doing them. And my answer to all of those is no, they're not risky. No, they're not complicated. No, the average person should be doing these. Okay? You'll see in today's webinar that they're not risky because you're going to see that you could set them up the right way, that they're less risk than buying a stock. They involve less margin. Right? You could do it if you have a small account and a large account. and that the trades we're going to focus on today average between 70 and 90% winning trades. And some people, when they hear that, they're like, oh my goodness, that means that I'm going to make all these little wins and then one loss will just take it all away. Nope. We're going to set it up so that you have the right risk to reward as well. All right. These trades can be done in up markets, down markets, and sideways markets. And you might be thinking, oh, that's all well and good, but what about times when there's a big down market, like the coronavirus collapse, when the market dropped like 36%? Okay, well, when the market dropped 36% recently, that was what, just a couple months ago, like February? Those people who had, let's say, a $100,000 portfolio, a lot of people saw a $36,000 drop in their portfolio. And you might be thinking, well, how does this income system, which is supposed to be low risk, how did that do? Well, we have a coaching group led by Ron Wheeler, and in the coaching group, they were seeing profits of 1,104 days, 921 minutes, and that was the beauty of this volatility. It actually worked faster. 1,200 in 4.5 hours, 403 minutes, 760 in 48 minutes. 900 in 21 minutes, right? And then 770 in 2 days. The typical trade that I'm going to show you today lasts between 7 and 11 days. The high volatility that we saw recently actually benefited these trades because they had higher premium and they were closing a lot faster. All right. Over this span, we were seeing gains of like over $6,000. Right? That was during a time period when the average investor lost $36,000. So that's a big difference between losing $36,000 and gaining $6,000. So we're going to take a look at how to do that trade today. So remember, you can do this. So here's an overview. Here's an overview of what we're going to cover today. I used to be a school teacher, so I usually, at the beginning of a lesson when I was a school teacher, I would give the agenda of what we're going to cover. So I'm going to first walk you through how to understand the trade. So even if you've never done options or traded options, you'll be okay. Because what I like to do there is I'll draw it out first. So that way it's more of a conceptualization, or you're going to understand the concept, right? I'm going to walk you through it one step at a time. Then we're going to go into examples where we're going to pull up a chart. We're going to take a look at exactly what's going on that chart and how the trade works. We're going to take a look at some case studies of some actual trades that we did with our clients so you get a better feel of it. And at the end, I'll wrap it up. I'll give you a checklist and a set of action items to take. All right, so it's like building, I like to say it's building a layer, like your knowledge sandwich, one layer at a time. You're going to learn more and more as we go throughout the session. Okay? Hopefully that sounds good to you, because we're going to kick things off by learning the difference between a standard trade and an income trade. Okay? A standard trade, right? Let's just call this like this is a typical trade that a lot of people make. We'll just call this standard trade. It's one where you only make money if you're right. Right? These are ones you probably do all the time, such as just buying shares of stock. That's a standard trade. Now, an income trade is one where you can make money whether you are right or wrong on direction. That's the definition of an income trade. And you might think, well, how is that possible? How can I be wrong on direction and still make money? Well, let me show you the difference. All right, so let's first take a look at a standard trade. And I'm going to actually draw on the screen with my pen. So let me get my pen out. So on a standard trade, right, when you go out and you look for a stock, hopefully you're finding a stock that you like, and hopefully it's in an uptrend. So let's just draw it out. Stock's in an uptrend. And what do? Well, you buy it, right? You buy it, let's say, right, you buy it here. That's at the current price. Well, after you buy it, if it goes down, that's not good, right? That's not good because you lose money if it goes down. Well, what about if it goes sideways? Well, you might think, well, it's not bad, but your money's tied up, right? You're not making money, you're not losing money, your money's just tied up. So it's neutral to bad because you could be doing something else with that money. The only thing that's good is if it goes up, right? That's 1 out of 3 scenarios. Okay? Now, this is what your income trade is going to look like. So we're still going to start off, and a lot of people are amazed at this, that you still start off by looking for those good stocks rising in price. So we're still going to start off by doing that. But instead of buying it at the current price, what you're going to have a mindset, you're going to shift your mindset. You're going to say, I just want to figure out where this stock is not likely to go, where it's not likely to drop to. For example, if this stock's been in an uptrend, you might say, well, it's not likely to go down here. And trust me, we'll look at some examples in a minute. We'll put some real numbers to this. We'll dive deeper on this, but first just kind of understand the concept. You're just going to pick a price where you don't think it's going to drop to. And you might say, well, all right, well, how do I make money by just picking a price it's not going to drop to? For now, just understand you're going to sell an option. Don't get hung up on all the stuff that's happening in the back end about selling options. Don't get hung up on that. Just think, all right, I'm going to sell something. I'm going to sell an option. And when you sell something, regardless of what it is, whether you sell a car, you sell a bicycle, you sell an option, when you sell something, you get paid. So we're going to get paid up front for selling this option. All right, so we're going to get paid. Let's just put a $sign there so you can know that you're getting paid. And as long as the stock stays above that price, you're going to make money. All right, so of course, if it goes up, you make money. Now, if it goes sideways, you still make money. Now, it might take a little bit longer. That's why I drew the line a little bit longer. Now, if it goes down, you can still make money. Now, it might take longer and longer for you to make money. Now, of course, if it goes down too far or too fast, that's where it would turn into a losing trade. We call it mitigation strategies to lessen the loss. But let's just say it just goes down to here. That could be a win-win-win in 3 different scenarios. But let's just say win if it goes up, win if it goes sideways, and I'll just count this as a loss. If it goes down, we'll just say, all right, we're going to chalk that one up as a loss. But still, 2 out of 3 scenarios, and possibly 3 out of 3 scenarios where you can make money. That's how you can make money even when you're wrong. Okay? Now, this can be done even in a down market. So let me just draw a little border over here. Now, in a down market, we're just going to find bad stocks that are falling and just pick a price where we think they're not going to rise to. And you'll see an example of that as we go through today's session. Okay? All right. So that's the concept. Just kind of drawing it out. We're going to add some numbers to it. Let's understand the trade itself. All right, so now let's get into the trade. The trade specifically is called a credit spread. All right, your broker might also list it as a vertical spread. Okay, and there's 2 types of credit spreads. First off is going to be the bull put credit spread, and second will be a bear call credit spread. All right, so it might be called a put credit spread, a call credit spread, a bull put, a bear call, a vertical spread. But these are the 2 types, bull put credit spread or bull put vertical spread, and a bear call. We're going to talk about both of them today, so hang tight. All right, so we're going to first look at a bull put credit spread. And the way that I like to teach it is just break it down word by word. Okay, word for word that's there. And because you might look at that, and correct me if I'm wrong, in the chat box, let me know. When I first looked at that, I was like, ugh, this is way too confusing. Bull put credit spread. I will learn that some other time. This is probably super confusing. I'll never understand this trade. So I just forgot about it for a while. But if you break it down word by word, it becomes a lot easier to understand. First word is bull. Second word put. Third credit. Fourth spread. So the first word of bull means how you feel about the market and the stock. You want to be bullish on the market and the stock. So you want an uptrending market and an uptrending stock. Put. This trade will only use puts. We will sell a put and we'll buy one all at the same time. Right? Your broker will take care of all the details. You're just going to say, hey, broker, I want to sell this put and buy this put at the same time, and your broker will take care of it. But just understand we're dealing with puts, and I'll show you how to set it up in just a second. Credit means you get paid. spread is the difference between the strike prices of the two puts. All right, I'm going to draw that out for you right now. All right, so if we come back over to here, remember our example from before. If I get my pen back out, remember before we had that stock that was going up. Right, you have that stock that's going up. You're picking a price where you don't think it's going to drop to. All right, remember I drew a line down here. Well, that is where you're going to sell the put. All right, so I'm just going to put sell put. So when you sell that put, or just understand you're selling that put. Let's just start there. When you sell something, you get paid, right? So I'm going to put a couple of dollar signs over here. Right? When you sell something, you get paid. Now you might be thinking, but when I sell a put, that's a lot of risk. Now, those of you who know a little bit about options, you understand that if you sell a put, you're taking on obligations to buy a stock at that price. Well, if the stock drops way down to here, like way down here, well, then you'd have obligations to buy it up here. So we don't like that. All right? This is a lower risk trade, right? So we're not going to like having a lot of risk. So what do? Well, you buy an insurance policy. So what we're going to do is buy a put just a little bit lower than that down here. Okay, so buy a put. Now, since that put has a strike price a little bit lower, it's not as expensive. It doesn't cost as much. So it's $1 sign worth. All right, so we received a dollar sign here. We paid a dollar sign there. Let's say those cancel each other out, right? That leaves us with a net credit. Okay, a net credit. That means you get paid. Now, remember, both of those trades are done at the same time. So you're going to tell your broker, I want to sell this one, buy this one, and your broker would do both of them at the same time, and you get paid up front. Now it's up to the market to try and take it away from you. And remember earlier, if the stock goes up, it's good. If it goes sideways, it's good. And as long as it doesn't go down too far, too fast, we could still make money. All right, and I'm going to add to this as we go through the session. All right, now, if those of you who like to look at profit and loss graphs or charts, I put one of them in here. Those of you that if this confuses you, just look away for a second. All right, so short put, that just means sell a put. All right, so sell put. That's another way to say sell a put is short a put. When you sell the put, you receive a credit. All right, that's why I circled this. That's green because you took in money. All right, but it's flat. Right? If I get my laser pointer back out, it's flat because the amount of money that you got paid, that's the most you can make. But remember when I said when you sell that put, you have all that downside risk and you don't like that? And that's why you buy this put down here. And the benefit of buying that put down here, you see how it flattens out your loss? You have a capped loss. You have a max loss on that trade, which is great. You like to have a maximum loss because you don't want trades that are unlimited loss. So the way that we're going to set this trade up is there's going to be a limited loss on the trade and a known profit objective. All right, and that's the bull put credit spread. All right, so now let's actually put some charts to this and some examples, okay? So let's start off with a stock trade. This is Costco, and if you bought Costco, right, a nice looking chart, right, at the time. It was going up, going up, going up, going up, and it's hitting a high, looking good. You're feeling good about it. Costco at that time was trading at around 207.98. So if you had bought 100 shares of Costco, what it would cost you? It cost you $20,798. And the only way you make money if you buy shares of Costco is if Costco goes up. Okay? And if you think about this, you spent $20,000 of your money on that trade. So you have $20,000 of your capital tied up and really technically at risk. I mean, granted, Costco probably wouldn't fall to zero, but I mean, your money's tied up and it's at risk. Okay? Well, we talked about a couple of things we could do instead. Well, we could just sell a put, let's just say we pick a price down here where we think it might not fall to. We're like, oh, cool, I'm going to pick this price down here. Instead of at 207.98 where Costco's trading, I'll do a 205 and I'll sell that put. However, just by selling a put, you're still got a lot of risk because the stock could fall down to here and you have obligations to buy it up here. We don't like that, right? You've got all this risk down here. What we're going to do is reduce that risk way down to that. All right, so instead of this, we're going to shrink the risk to that. And we do that by buying a put down here. By buying that put at the same time, it shrinks the risk immensely. All right, now it does cost something. So we received $246 for selling this put. Well, we're going to use some of that money to buy this put. So it costs $121 to buy this put, but that leaves us with a net credit of $125. Okay, a net credit of $125, and our risk is only $375 instead of $20,000. Okay, so that's a big difference between the amount of money that you're risking in those trades. So that is just just with one contract. Now, you could do more than one contract. Let's say you did 10. If you did 10 contracts, you'd have a credit. You'd get paid up front. Yes, up front, $1,250 for placing this trade. So, again, remember, Costco could go up. It could go sideways. It could even come down a little bit. As long as it's up here, you could be making money. All right? So let's look at the case study of Costco. What happened with Costco? Remember, we placed the trade over here. Now, we placed the trade right here. So if you look at Costco, it went up, it went down for what? 6 straight days, and then it went up again. So all in all, after you placed the trade, Costco only went up 1.4%. So if you bought Costco, you'd be like, oh, wow, I got a 1.4% gain. Yay. Right? But if you had done the credit spread that we were talking about today, like Frank here did, we did this trade with our clients as well. Frank said he closed his BPS, that stands for bull put spread, on Costco, and he made $955 in that span. Was that 2 weeks? All right, so that's an example of making money even if you're not really right on direction. So you were kind of right. Costco went up 1.4%, but you weren't really, really right. So you can make money and income even if you're not fully right on direction. So I'm going to ask you a question before we go on to the bear call credit spread. Let me just check in with you. If you could make money even when you're wrong on direction, how would that feel? I saw Ray typed in, that's a nice annual percentage rate that you're getting. Yeah, it's a nice rate of return. Levister says awesome. John also says awesome. I see feels good. This excites me. It's really good. Awesome, says Ray. Beautiful, says Tim. Yeah. To be able to make money even if you're wrong on direction. I mean, how many times have we all, and I've been there too, where you feel really good about a stock trade that it's going to go up, but it doesn't. Well, how about if you had a trade that you could do and you could be wrong and still make money? Pretty good feeling. All right, so the second trade is the bear call credit spread. Now, this is the one that you're going to do in a down market. So we're going to look at the 4 words, bear call credit spread. So bear is a downtrending market and a downtrending stock. Typically, the stock is going to be like in a lower highs, lower lows, bad fundamentals, dropping earnings. It's just a bad company falling. Okay? Call means this one is going to use only calls. Remember the other one that we looked at was puts? This one is just calls. And again, we're going to sell one and buy one. And then credit You get paid up front. Spread is the difference between the strike prices. I'll draw it very quickly. I'm not going to spend a ton of time drawing it out because I think you kind of got the gist from the last time I drew this out. But we're going to look for stocks that are falling, right? Lower highs, lower lows, poor fundamentals, dropping earnings. It's just bad. You're going to pick a price based on probability. You're not just going to make it up. I mean, you could look at the chart and eyeball it, but you could say, based on probability, where is this stock not likely to rise to? Because this thing has been in a downtrend. Your idea is that this stock, if the market is falling, this stock is going to continue to fall with the market. So you might say, well, based on probability, it has a small chance of going back up to that price. Even if it starts to go back up, it might not go up to that price. Right? So you're going to pick this price up here. That's the call that you sell. And by the way, we are not selling naked calls, right? We're not advocating selling naked calls here. So we're going to sell this call and we're going to buy a call above it as our insurance policy. That way, if this stock does go against us, this caps our loss right up here. All right, but we can win if it continues to fall like we think it will. Even if it kind of goes sideways, even if it goes up a little bit, we can make money. But we will exit this trade if it hits this line right here. We're out. Okay? We would exit that trade if it hits that line. So let's look at Facebook from a while back. So, and it doesn't have to be Facebook. It could be stock XYZ. You're going to find charts that look like this all the time. The key here is, not necessarily that it was in an uptrend, but now it is in a downtrend. Lower highs, lower lows. This stock is in a downtrend. All right. And then the key is to match this stock with what's going on in the market. So if the market is in a downtrend, you find stocks that look like this that are likely to continue to fall. So now you just got to figure out where you think Facebook is not likely to rise to. So it's currently at 157, right? It's currently at 157.25. Now the market's bearish, the stock is bearish. Where is Facebook not likely to go? And I'll ask you this in the chat box. You'll share with me. It's currently at 157, and I don't know if you can see these numbers very well, but this peak right here is 170. Up here is 175. Where do you think if this stock started to go back up, where do you think it's not likely to get to? And let me rephrase that question. I'm not saying where is it not likely to get to ever. Let's just say where is it not likely to get to in the next month? In the next month, where is it not likely to rise to? I'm seeing 170s, 180s, 175. So I'm seeing actually numbers all over the place. Yeah. All right. And you guys hit on something that I wanted to touch on. Some of you are saying 190. And yes, the probability of it going up to 190 is remote. However, the amount of money that you would generate would be remote as well. All right, so there's a balancing act that we're doing here. We're balancing the amount of risk that we're taking to the amount of reward. There's got to be a balance where we're putting probability on our side, but still getting paid enough. So we're not going to do way up here. In this example, the balancing act was right here, a 165. Now, granted, we could have done a 170. We could have done a 175. But the amount of money that you would have gotten paid on that trade would have been less and less and less as you go higher. So this was a nice little balancing act. As it says there, based on probability, it most likely wouldn't rise above 165. That's where we sold the call. We received $455 per contract for selling that call. All right. But that's a naked call. We don't want to be naked on the call. All right. So we're going to want protection. Okay, so we buy a call just above that as our insurance policy. Okay, so we just bought the 170. And remember, both of them are done at the exact same time with the broker. Okay, and it costs us $310 to do that insurance policy. So if you subtract the two, it leaves us with a net credit of $145 per contract. All right, $145 per contract to do this. And that's with one contract. So if we did 10, we'd be generating $1,450 right out of the gate. Now, by the way, our profit objective on this trade would be half of that, like $725. All right, and then once you make that profit, you walk away to the next trade. And I do want to alleviate some fears. This number right here, even though it is small because we have the insurance, you will, on these trades, the way that we teach it, you will never, ever incur the maximum loss. All right, you'll never incur the maximum loss on the trade. Okay? All right, so let's look at what happened with Facebook. So remember, the trade started here, started right there. Facebook actually did exactly what you wanted it to do. It dropped 7%. So those of you who like shorting stocks, if you shorted Facebook, you would have made 7%. Great. But the return on your investment on the credit spread was 20%. 20% in 2.5 weeks. So a 20% return on your risk versus a 7% return on your risk. Okay? So this is a way, and you remember way back at the beginning of today's webinar, I showed several examples of what we were doing during in this coronavirus collapse. A lot of those trades were bear call spreads because the market was falling. We did a lot of the trades on just the S&P. We did a couple on, like one was on United Airlines. So when the market was falling, we were finding the falling market in the S&P and falling stocks and making money as the market fell. So if you had an income source, even in down markets, what would be the impact for you? Like when this market was falling, if you had a way to just still generate some income, even if it was just to mitigate losses that you were seeing in your 401k, how would that make you feel if you had a way to generate income in down markets? Kevin's like, Yahoo. He says, John's like, fantastic. Nice, says Samrath. Great. Yeah. So I told you we'd look at a few case studies. These are case studies that we did with our clients, right? So I told you this webinar is built on results. It's not just fake trades or theory. So I want to show you not just trades that we could come up with and figure out that, that kind of worked in the past. I wanted to show you examples of trades where I actually had examples from our clients who posted on our private Facebook group that they took the trade too. All right, so with this example, it was with the S&P. All right, so as you can see here, SPX, that's one of our most popular options that we trade. And those of you who are new to options, one of the things that we teach is using just the S&P because it's super simple. You don't have to sit there and look to find stock candidates. You don't have to do any of that. You just do the S&P. Okay? We have a whole system built on the S&P, which has got about an 87% success rate over the years that we've been doing it. All right? So in this example, I know the S&P is not currently, doesn't look like this shape, but let's look at what's going on here on this chart. Whether it be the S&P or not, if your stock looked like this, if you had a stock that looked like this, and you had a signal that said the market was in an uptrend, you'd be bullish on this because it was hitting higher highs, higher lows, all right? And so you'd say, all right, I am bullish on this stock. So remember what you were going to do. Where do you think this is not going to go? All right. So currently in this example, the S&P was at 2867. And I was going to ask you for what you thought, but those of you who are keen, would see that Doug up here said that he did his first credit spread. Now, he shouldn't have used the word bought. He actually sold his first credit spread. He did 27.75 and 27.55. So I drew that on the chart here. This is right around where 27.75 is and where 27.55 is. I mean, look at all that space. Look at all that space from where the S&P was. It's even below this recent low. And that if you could do that on your trade, that is ideal. Okay? Whoops, there we go. So let's take a look at what the result was. I filled in the rest of what Doug wrote in. He closed it on April 5th. All right? Gain of $1,000. Now, S&P only rose. Look at this. The S&P only rose 1%. But the trade that he did, this bull put spread that you just learned today, and again, both of these are just done at the exact same time with your broker. It's just one trade. He generated a gain of $1,000. Okay? That's an income stream. $1,000 in 5 days. All right, so if we look at another example, this one is with Alibaba, right? Now, this is an example of doing it when the market's going down. Okay, when the market is going down. Perfect example. Stocks going down, right? This is a downtrend. So what we're going to do is make sure the market is going down, the overall market. Find a stock that is more likely to fall than it is to go up. And then remember, we're going to pick a price where we don't think it's going to rise to based on probability. So I would again ask you, but I should have hid this in the webinar so that way it didn't give you the answer. What Manoj did is he picked a 150 strike that he sold, and this one is his insurance of 155. So look at all of this space. The stock could go all the way up here before he has to close it and take a loss. All right? So there's a lot of space up there. It hasn't hit that price in, 3 weeks. And I saw somebody in the chat ask, how far out do we go on these trades? We're going to pick expiration dates that are 21 to 45 days away. That's why I said earlier, think about, where's the stock not likely to go in the next month? All right, so as long as if this stock goes down, we're good. If it goes sideways, we're good. It could even go up and it go against us way up to here before we have to close it at a loss. All right, so if I erase all my lines, the result ended up being Manoj typed in, I'm out of this trade with my 50% of max profits through his profit order. So we would teach you how to enter the trade and then enter a trade with the broker to close it immediately if you make 50% of your profit target, or 50% of the max credit, I should say. So this stock dropped 3.5%, but the result was a 50% in 2 days. Now that's 50% of the max credit, right? 50% of the max credit on that trade. I wish Manoj would have typed in how much money he made and how many contracts. I don't think he didn't list how many contracts he did. Otherwise, I could have calculated a little bit more for you. All right, so case study number 3. Again, this is a trade that we did. This is OLED in this example. All right, so OLED, it looks bullish, right? I'm not going to tell you the strikes. I want to see if you give me some guesses. So this stock is going up, right? It's in an uptrend. It's actually near a high. It's at 194.20. I don't know if you can see that. 194.20. If you were to pick a price that you don't think it's going to fall to, and again, I know you could say, well, I don't think it's going to fall down to 100. Well, yeah, you can't pick 100 because you're not going to get paid anything. Let's balance risk and reward. So I'm seeing 175 from Nick and Jerome, 180, 185, 180, 178, 160. All right, well, let's take a look at what ended up happening. The stock was at 194. We were able to get a good enough credit at 180. All right, so you work out the percentage drop. That gives us a lot of leeway on this. It hasn't hit that price in about a week and a half to 2 weeks. And over here, you see Frank took this trade. He closed his OLED bull put spread. He had the 180, 170. Yes, so you can do a 10-point spread. That's fine. And he said he closed it at 50% profits. All right, now he says earnings are next week. We always close these trades prior to the earnings announcement. That way we don't have to take on that risk. Okay? The stock ended up going up. Now, this is ideally what you want. You know, if you're in a bull put spread, you want the stock to go in your favor. And that's exactly what it did for Frank, which enabled him to close out of this trade. And I know you can't really see it very well, but he has a little screenshot of his profits right here. The number that he typed in, that he had in there, $1,465, and it was a 13-day trade. Okay, the stock actually went up. It went up maybe, was that 10% or so? It went from 190 to 210, roughly. No, sorry, not 10%. Yeah, 10%. That's about a $20 rise. But he made $1,400 on that trade. And then when you close the trade, I see a question, do you have to close both at the same time? Yes, it's one trade in, one trade out. All right? And you just enter it ahead of time with your broker. So with these trades, as I mentioned before, the typical trade with these credit spreads is 7 to 11 days. The average length is 9 days. So I'm going to do some numbers here. You know, let's say 90% of the time, I told you the system that we do at the S&P averages about an 87% winning rate. So that would have been very difficult math for us to follow. So I rounded it to 90, but you can do the math later and say, what would 87% look like? That's what you see, the 87% over here. So the way it's been working out, 90% of the time, making about a 7% return on average on the amount that you risk. 10% of the time you take a loss, and you notice the loss is bigger than the gain, and that's fine. We could do that as long as we have such a high winning percentage. Let's do the math. All right, do the math. I'm afraid to do the math sometimes, but let's do the math. All right, let's say you did 10 trades, 90% win rate would give you 9 wins. 9 wins at $700, that's, you remember, 7%. $6,300 on your wins, your one loser, a $1,400 loss. Net income, $4,900. All right, some of you might be like, well, I'm not always going to be at 90%. What if I didn't hit the 90%? What if I only did 80%? Well, that's what's down here. If you're at 80%, you'd still have 8 winners out of the 10 trades, $700 per win, $5,600. Your 2 losers would be $1,400 a piece. That's $2,800 on your losers. Still, at the end of the month, a net income. Okay? A net income. So if you had an income system like this, just visualize, if you had a way to generate positive income each month, even if whatever the percentage works out to be, if it was positive income each month, what would it allow you to do? Daniel. Daniel, that's the first time I've heard somebody, had somebody type that in. Daniel said, breathe. Raj says, I'd be able to pay my bills. Brag to my wife, says Rob. We always got to be humble, though, right? Be humble. Buy a house, relax, reinvest, retire. Yeah, just feel better, right? There's a lot of things you could do. All right, so let me walk you through the credit spread, and I'll be able to answer some questions as I go that I saw come in the chat. Here's a checklist for you. All right, I want you to take this checklist, jot it down, because you need to follow a system. All right, you need to have a system. I don't want you just to be haphazardly saying, oh, let me do this bull put, let me do this bear call. Let me pick these random strikes. I mean, you got to have a system. You know, we here at VectorVest, we teach a system to doing this. So I put together this checklist for you. So the first part of your checklist should always be market direction. Okay, now some places out there say that you can't time the market. Well, we're not going to predict the market. We're just going to say what direction is the market heading in right now. Is it in an uptrend right now or a downtrend right now? All right. So that's the question you're gonna answer for yourself. Is the market currently in an uptrend or a downtrend? Now, I think a lot of the people on today's webinar, I should have asked this earlier. A lot of you currently use the tool that I use called VectorVest. If you don't, you'll have to you might want to either look into using VectorVest or have some other way of determining market direction. We here, those of you who do use VectorVest, one of our great signals to use is called the DEW timing system. It's a great middle of the road signal, not super aggressive, not super conservative. So the DEW is a great one to use. I know our options income coach, Ron Wheeler, he uses that quite a bit. So the DEW is a great signal to use if you happen to use the VectorVest software. Now, the next step from that is stock selection, selecting a stock. All right, so if it's a bullish trade, you're going to want to pick a rising stock with good fundamentals. We've got a lot of great searches in VectorVest, like ruler stocks, safe and sound, things like that. Those are some searches. They're the same searches you would use to find your good stocks to buy, but we're going to run those searches and help us find good options candidates as well. For bearish trades, we're going to find falling stocks with poor fundamentals. So those of you who use VectorVest, we actually have some great searches to help you find those types of stocks, like Gravity, Vern's Vultures, IG Plungers. All right, those of you who don't use VectorVest, I'm naming things and they probably sounds like a foreign language, but they're searches built into our tool that give a list of stocks that meet this criteria. All right, so if you think of where you are right now, you've got a way to determine the market direction, whether the market's going up or down. From there, you're going to find stocks that match the market's direction. All right, so what do you do next? Now you've got the stock. You're going to set up the trade. And just one quick question that you can ask yourself is, where is the stock not likely to go? Start with that question. We have a paycheck system that we teach, which looks at probability. And those of you who use VectorVest, we actually did a video this past weekend where we focused on 40% probability. All right, which basically means you're going to set up the trade so that way, right out of the gate, you have a 60% chance of winning, just based on what the stock is doing. And then you might say, well, how do you get up to 80%? Well, when we combine this with this and this, you're just stacking probability. So you're going to start off with an 60% probability. And with the market going in your direction and you're picking a good right stock, you're going to stack probability on your side. And then next, plan the trade. Okay? First and foremost, close the trade if you make 50% of the maximum amount that you can make on the trade, and then just move on to the next trade. All right? History has shown that taking profits at 50% and moving on works best over the long run. And then we didn't have time to get into this. I mentioned it a couple of times in passing as far as what to do if the trade goes against you. We have a way that we teach adjusting to minimize losses. But this is a big one that you should never forget. If the trade goes against you and it hits your short strike, the one that you sold, you exit the trade. So remember, we had a stock that was going up, and I drew these two lines like this. If this stock goes against you and it touches that price right there, you close the entire trade. Okay? Now, we do have things that we teach where if it goes against you, we just add the other side of the trade to help minimize some of the losses. All right? But we didn't have, obviously with just an hour today, we didn't have time to get into all of the nooks and crannies like an English muffin, right? All right, and then lastly, you go place the trade with the broker. And remember, the trade, it's one trade. You go to your broker, you say, I want to sell this one and buy this one, and you hit send, and the broker just does it for you, right? It does it all as one transaction. So this is what I'd like you to do. Take your pen. Hopefully you still have your pen or your pencil. All right? And determine kind of what you're good at right now. So put a star next to the things that you feel comfortable with. So if you have a way to determine whether the market's going up or down, give yourself a star right there. If you're not really good at planning out the trade and you don't know how to adjust or close or take profits, maybe give yourself a frown there. So I'm going to give you 5 seconds. Don't overthink it. Just very quickly, star, frown. There's only 5 of them. Ready? Go. 2, 3, 4, 5. All right, so that's your system. What did you just learn? Right, what areas do you need to work on? What did you learn about your system? If this is your system, these 5 steps, what did you just learn? Mark, congratulations. Mark says he's got 5 stars. He's ready to go. Awesome. Vilmar says planning the trade he needs help with. Richard, number 3, determining market direction. Sid, I wouldn't say you say I'm a dunce. It's something that you can definitely do. You just got to put in a little bit of time to learn it. Don't give up, man. Planning the trade, setting up. Yeah. So, we've been here, almost an hour, right? What are your action steps? Right? What are the action steps to help you begin to unlock an income stream for yourself? Right? At the start, I promised I would give you everything I could. And at the end, I'd show you where you can go to get more help if you want it, to get faster results. Some of you, like Mark, you might be in a position where you're like, I feel like I'm pretty good to go. That's fine. Congratulations. Move forward, my friend. All right? If you want more help and to get faster results, if it's okay with you, I'd like to show you what to do or what I would recommend. It'd actually be a full course that we put together called the Options Paycheck. So if you want to get results fast, we think it's the absolute best thing that you can do is register for this course. All right. I'm confident to say that because, we get emails like this. This just came in a few months ago from someone who just took the course. He says, Ron is our lead instructor on this course. He says, I'm not much for going on Facebook and bragging about my results, but I wanted to share with you my results since taking the class in the fall, right? The fall that just occurred. He said, I closed out of 87 trades, 64 of them winning. Profited over $21,000 while starting with an $85,000 account. So those of you who are asking about how much money, how much money is required to see certain results, here's just an example. Joe started with $85,000 and in just a few months made $21,000. He says, I've traded for many years with no real plan to mix results. I can't thank you enough for this class and what it can do for people. Keep up the good work. All right. This is the course. I just wanted to lay out all 7 modules right up front for you. Just very quickly, we start by building a strong foundation in options. So those of you who don't really know a lot about options, we got you covered in module 1. Modules 2 and 3 will show you how to create income trades that have a 70% chance or better of working out. I saw somebody in the chat asking about, what about when the market's going sideways? Well, that's module number 3, how to profit from neutral markets. Then in module 4, we're going to show you how to quickly find and select the best stocks to trade. Module 5 is about setting them up the right way. Which ones make the best candidates, how to set them up. Module 6 is all about how to minimize losses, how to repair trades, how to manage your portfolio, risk management. And then number 7, module 7 is where we take you to the broker and show you how to enter the trade with the broker. All right. We've even put everything you need into a checklist. So actually something you print out and every trade you do, you can check things off as you go so you never miss a step. Okay. It's always comforting having that security blanket, right? Making sure that you've done everything right. All right. Now, before we talk about the low price of the course, I want to make it even more low risk for you. We offer a 100% money back guarantee on the course. You go through the whole course if you want. Go through everything. And if you've done the work and you're not satisfied, we'll give you a full refund. You got to do the work, right? Because we know if you do, you're going to see the results. Okay? When you do this system, you'll be learning the system that generates about 3% per month, at 36% per year. In fact, I think Ron ended last year over 50%. Okay? Before I tell you any more about it, I want to point something out. It's important you understand it's not a get-rich-quick scheme. It's not something where you should expect to become a millionaire tomorrow. It's serious. It requires some effort on your part. Like Joe, it required effort. He went through the course. He learned it. He did it. He saw the results. But if you're not going to commit to it, then don't do it. It's not for you. All right, it's for serious people who take their investing seriously, who are willing to put time in to learn the system. All right, if you're serious about this and ready to do the work and get the results, the Options Paycheck course is perfect for you. So you're going to get the entire course delivered live and recording. You know, some of the courses we do, we don't deliver live. This one we're going to deliver live every single week to you. Right? We're going to go 7 modules, 7 weeks, live sessions. Okay? Plus, you'll get the recorded version of each session. If you're worried that it might be too much, we're including this bonus called the SPX Paycheck. This is where we take the entire course and we boil it down into something that you can do in like 15 minutes a week. I saw somebody in the chat box just recently say about what are the time commitments to doing this. This SPX Paycheck really is one trade, one ticker symbol, one setup rule, one profit rule, one stop criteria, something you could do in like 15 minutes a week. All right? This is the one that, you know, it's simple and easy to do. Most of the trades that we did that I showed you earlier during the coronavirus collapse to make that $6,000 were actually S&P trades. Okay? Okay? For a lot of our students, this is the only system that they use. Okay? Plus, another bonus that you get, in addition to the live modules being taught to you, you'll get 7 live mastery support sessions. So we're going to be there with you every single week to help you implement. So like on Tuesdays, we'll teach it live to you. Then on Fridays, we'll catch back up with you to see where you need help and help you implement, go through the homework and help you do the stuff. So if you're worried that you can't make it to a live session, don't worry. You can submit your questions in advance and we'll send you the recording of the session. Another cool thing is you get invited to a private Facebook community that's purely dedicated to investors going through the course. Plus, you get an additional 12 months, get this, 12 months of support from Ron, the head coach that goes through this course. He will do a live Q&A with you once a month on that Facebook group. So it's like, all right, you finished the course and now you've got another, 12 months of support from the coach. Okay? Plus, we're going to give you access to our members-only group coaching program. It's an exclusive group of our coaching clients. We give access to those coaching sessions for the next 7 weeks. So you're going to see in real time how we find, select, and set up option income trades. Basically, each week, you're going to see trade recommendations and how to manage trades in real time. Okay? So these are the sessions where you'll see in real time how we set up these trades. And remember, the trades at the beginning that made over $6,000 during the coronavirus collapse, they were all set up in real time in these sessions. So by coming to these sessions, you're going to see those trades in real time. Plus, you'll get 7 weeks of access to the software. So some of you already have VectorVest. All right, well, we'll give you Options Pro during the course. Some of you don't have either one. We'll give you access to both during the course. Okay, this is that tool for speed. Okay? And this last bonus that I'll mention, but not least, is our Options Foundation course. There is probably about 50% of you who said you're brand new to options or you're a beginner level. So if you are new or you just want to brush up on the core building blocks, this foundation course that you get as a bonus for ordering today will teach you the 4 core trades of buying a call, buying a put, selling a call, selling a put. All right? That way, when we start officially the paycheck course next week, you're going to be able to hit the ground running because you've already gone through the foundation. Okay? You can have access to this foundation course like tomorrow and be in there and going through it. So again, what do you get? You get all these things. You know, if you add it all up, the total value is over $6,800. Here's what we'd like to do. Basically, roll up our sleeves, work with you to help you create an income system in your portfolio, even if you've never had success with options. We're going to do it, right? So you've spent about an hour with me today. So if you want to join us, and have us take you by the hand and help you install an option income system in your portfolio, then instead of $9,000 or $6,000 or whatever, it's only $995. Right? It's only $995. Go to optionspaycheck.com. However, I mean, you've spent an hour with me. I want to reward you for doing that. You spent an hour with me on today's webinar. Here's what I want to do for you. If you order before we're done with today's webinar, instead of paying $995, you can actually get it for $895. The $895 price is even lower than our elite pricing. Okay, it's even lower than our elite pricing. So if you're an elite member, this is even lower than elite pricing. So that means you get the full course, 1 year of access to the course, the 7 mastery sessions, the access to the software, the SPX bonus, the Facebook group, the members only group coaching, the foundation course, all of that for $895. So the $895 price will only be for those who register before we finish up today. Right? Now, those of you who have taken this course before, or you're one of our coaching clients in our Ultimate Retirement, we actually have a discount even further than this. I'll tell you about in a little bit. Ask yourself what it would cost you not to do this. You know, how much money would you lose learning by trial and error? How much potential profit would you miss out on? How much time and energy will you spend trying to do it on your own? Then ask yourself how your life would be different if you do this and it works. You know, what if you ended up being like Joe, who just made $21,000 in 3 months, 4 months? Right? If I were to say that I would exchange, if you gave me $1,000 and I gave you $20,000, you'd probably make that deal. Now, of course, I can't guarantee that, but if I were to ask Joe, hey, give me $1,000 in 4 months, I'll give you 20. I mean, he'd probably jump on that every day. So there's a saying that I love. The best time to plant an oak tree is 20 years ago, so you could be sitting under it now enjoying the shade. Do you know the second best time to plant that oak tree? It's today. It's not too late to begin to prepare yourself for retirement and learn to generate income. This is one of those deciding days in your life, right? Will it be the day that you decide to take action and set yourself up for a secure retirement? Or is it going to be the day that you look back on where you squandered an amazing opportunity to create a consistent income stream? I hope you don't regret the decision that you make right now. Don't miss this opportunity. Ron, myself, Jim, John, we all look forward to working with you in this class. Again, go to optionspaycheck.com. Get yourself registered now before registration closes. Remember, the $895 price is only available while we're live on the webinar. It's even lower than the elite pricing. So if you've never taken the Options Paycheck course before and you want the lowest possible price, go to optionspaycheck.com. After the webinar, the price will go back up to $995. Don't wait or you miss out. All right. So go to optionspaycheck.com, fill in your details. I've already seen a bunch of people in the chat box saying I'm in. If you know this is right for you and you're joining us, just type those 2 words in the chat box. I'm in. I just type I'm in. Dennis, Philip, Lax, John, Raj, Ayaz, Vilmar, Frederick. It's like, I'm almost in. I'm in, says Mark. I'm in, says Sam. Brad says in. Mark says I'm in. Ronald says I want to be in. Yeah. Welcome to all of you. Welcome. Let me go through a couple of quick. I'll answer all these questions, and I might ask you have to, retype some questions in. So let me cover some of the most common questions and common things that I see. First off, I want to say welcome to all of you who are in. Like Todd just typed in, I'm in. Charles and Avery said, I'm in. You should get an email from us virtually immediately with all the details. The link to the Facebook group, the link to the foundation course. So if you already have a VectorVest username and password, you can actually get in and get access to everything right away. All right, so I would recommend you go in and request to join the Facebook group. We'll get you in there within about 24 hours. Start going through the Options Foundation course. You can go through that immediately. If you don't already have a username and password, give us about 24 hours and we'll help you get that set up. So you'll need to set that up and then you can get access to the modules and everything else. All right, so welcome to all of you who are in. The most common question that we get is the live sessions. When are the live sessions? Here's a calendar of the live sessions if you wanted to attend them live. So what you see here, these are the live course modules. You see the first one is actually May 7th. All the other ones are on a Tuesday, all right? 4:30 Eastern time. If you can't make it, don't worry. You'll get a recorded version of the session. We'll even give you a recording of the live Q&A that we did. So if you have questions, you could submit them in advance. We'll give you a private email address, or you can post on the Facebook group. The mastery sessions are typically on Fridays, except for the first one is May 11th on a Monday. Okay. So those are the dates and times. And remember, the fast action bonus, the $8.95, is good while we're live on today's session. All right, let me back up. I mentioned earlier, if you've taken this course before, actually, Rodney, you beat me to it. Rodney says, if we've taken the course before. So if you've taken this specific course before, the options paycheck, and you want to do it again, right? Now, some people say, well, why would somebody want to take it over again? Well, they might have taken it 3 years ago and they want a refresher. Or maybe they want all the bonuses all over again, because they are some really killer bonuses. If you've taken this course before, the options paycheck course, you can actually get it for $4.95. All right. We sent you an email with a discount code that you would use on the order page. If you qualify for that, if you feel you qualify for the discount, either look in your email for the discount code. It would have come probably from Ron. He would have sent you an email with an alumni code in it, or you can post in the chat box and ask John to pull up your account and see if you qualify. Also, if you're a member of Ron and Jim's Ultimate Retirement Coaching Group, you can get the course for $4.95 as well. Okay? All right. The questions about the Options Foundation course. Yes, the Options Foundation course is different than our Options Jumpstarter course. The Options Foundation course is purely to build a foundation on what a call is, what it means to buy it, what it means to sell it, what a put is, what it means to buy it, what it means to sell it. All right? It builds that foundation. It's awesome for those of you who are brand new to options. You could start going through that tomorrow and have that all knocked out. There's like 4 or 5 modules in it, and be ready for the first module of Options Paycheck on May 7th. All right. All right. So I see some other people saying amen. I missed a few. Richie, let me see if I can pull this over here so I can answer some more of these questions. Todd says, I registered and I paid. How long can I expect to receive my email confirmation? It should have come. All right, it should have come already. All right, so check your junk, check your spam. It should be there. What I'm going to do, folks, is I haven't been able to fully look at all the questions that have come in. I'm going to put a flag right now on that question that Todd just put in, and I'm going to go rapid fire through these questions as best I can and help you out. So if you typed in a question and you need your answer to make a decision, type it in. If you are in and I did not call out your name, type in I'm in. All right. Wouter, have a great rest of your day as well. John says, I'm a VectorVest customer already. I registered for the Options Paycheck course. Can I get access to the Options Pro software now? I did not get a code for the $4.95. The Options Pro software will become active by the first day of class. It might be a day or two before, but we say by May 7th. We wouldn't activate it this early. If you didn't get a code, John, my coworker, my teammate in the background, will check it for you. If you are a member, of the Ultimate Retirement Group, I just want to clarify that. If you're a member of Ron and Jim's coaching, The Ultimate Retirement Group, you get the course for $495. We have other coaching groups, which are the Retirement Coaching Group or the Successful Investor Coaching Group. The $495 is not for all those coaching groups. It's just for if you're a member of the big one. Okay? All right. I lost my place on all the questions. Hold on one second. All right, so that was Tom. Ronald says I'm in. Jean Marie says I'm in. Welcome to both of you. Great to have you. Hopefully you'll request to join the Facebook group. I've already started saying hello to tons of people in the Facebook group already. So welcome to both of you. Philip says I got my confirmation email already. Thank you for the clarification and the notice there, Philip. I appreciate you letting me know. Guido says I'm a member of the retirement coaching group. Do I qualify? If you're a member of the retirement group, you can join the course, but you can get it for $895. All right, it's not $495 for the retirement group. It's $495 for the Ultimate Retirement Group. John says, do I need to own the stock before I do these trades? No, you do not. None of the trades that we teach you in this course will you have to own the stock at all. You're not going to be buying the shares of the stock at all. Brent, what is a realistic amount of working capital to make this work? You know, you could do this with as little. We talked to somebody who was doing this with $5,000 in their account. I mean, you could probably do it with less. I mean, you'd be limited into doing just like one trade or so. Yes, you could do it with 5. One of our case studies, it's not on our website, but we talked to him for quite a bit. He made a lot of money, and relatively speaking, right, with $5,000 percentage-wise. My gut would say between 8 to 10,000 is a nice starting point. Give you some flexibility in doing 2 or 3 trades. Mark says, I got my confirmation email 1 minute after I registered. Thank you. He says, your system is working fine. John says, I'm in. Welcome aboard, John. Marianne says, how much capital is needed to start up? Hopefully I helped you out with that answer. All right. Raj says, how much margin account required for credit spreads? Hopefully I answered that one for you as well. Some of these trades that I was showing, you could do with just one contract and you only needed like $500. Like I showed you the Costco example and Facebook example where the maximum risk on the trade was $375. That's really all you would need to do that trade. All right. So you don't really need a ton. I mean, you could do these stock trades with, like I said, a couple, $2,000, $3,000. I just think, it would be better to have a little bit more, but it's not necessary. Todd says, I didn't get my email. The only thing I would recommend that you do, Todd, is I know that I wouldn't say call right now because a lot of times after a webinar, the phones are a little bit busy. I'm going to ask John in the background if he can work with you just to double check your sometimes it's just we have the wrong email address in our system. And maybe he could send a new email to you. All right. Otherwise, you'd have to give our team a call. And I know that the phones are a little bit busy, especially after one of these webinars. Stanley, great question, says, how do I register? You would go to optionspaycheck.com and unfortunately, that was not typed into our chat box. Let me do that now. www.optionspaycheck.com. There we go. So in the chat box, I put the link. You could just click on the link in the chat box. Lax says, I just registered. Awesome. Ayaz says, I didn't get a code. Now, keep in mind, if you're an alumni, we only allow one refresher every 12 months. So if you've taken a refresher before, that might be a reason you didn't get the code, or it went to junk or spam. But maybe John can look into it for you. Ashwani says, I'm already registered for the course. Awesome, Ashwani. Welcome aboard. This is my lightning round of answering questions. Anthony says, I'm almost in. Awesome. Welcome, Anthony. Lawrence, you signed up before the webinar. Um, yeah, so I would recommend you just contact our team and explain that situation to them, and they should be able to take care of it for you. You know, the difference, since you are on the webinar live. Richard, the Options Pro software it's a cost to us to give it for the 7 weeks. I mean, it's not something free. We have to pay some pretty hefty exchange fees, so we can't just give it free. All right, so it's something that we actually are basically eating some of the cost on Options Pro. Not some that we actually have to pay exchange fees, giving you access for the 2 months during the course. Ashwani says, in the course, it says first course shall be Options Jumpstart. I'm not sure what you're reading there, Ashwani. Can't help you. Dave, the next time we offer this course won't be for several months. It'll probably be mid-summer-ish. Let's see. Ashwani, we'll give you a link to the Facebook group. It'll come in the email. Just click on the link, and then once you're there, click join, and we'll get you in. I don't really know the answer to that one, Dave, about doing it in a Canadian retirement account. Maybe if John sees that and he's had those questions come up. One of our testimonials that we've got is from somebody who lives in Canada, but he traded through his American account. Brent, great question. Brent says, do I need to purchase VectorVest, or is it included with this price? That everything you need is included with this price. The $895, it includes VectorVest, it includes the Options Pro software. So $895 is it. After the course is over, you're not tied into anything. If you do want to continue with VectorVest, we'll give you some choices, some options, no pun intended. Chiwa says, I'm in, welcome aboard. Jeb says, just paid, excited to get started. Welcome aboard. I love the excitement, Jeb. Great to have you. Jamie says, do you have to close both positions at the same day? We're going to treat it as one trade. So yes, both trades in at the exact same time, both out at the same time. Your broker will do that for you. Well, you have to enter the trade, but then your broker will take care of doing both at the same time. Guido says it only took 5 seconds to get my confirmation email. Oh, thank you for letting me know. I'm not sure what you're asking, Najendra. You're saying what's the difference between BPS? That stands for bull put spread. And you say selling the same. I'm not sure what you mean there. Lawrence says, can I get assigned? That's one of the big worries that people have. We do not hold any of these trades until expiration. Part of our system is to close it prior to expiration. So you're not going to get assigned. And you're not going to hold these trades so that they're in the money. So those are the two reasons things would get assigned. If they're in the money or they're at expiration. Well, in the money at expiration. But either way, we're going to close the trades. Quick answer is no. Following the rules, you will not. Utam says, I'm in. I just registered. Welcome. Ayaz says, paid and I'm in. Welcome to you as well. Patrick says, with no experience in trading at all, what happens if I open a brokerage account and they won't let me do credit spreads? All right. So Patrick, just, speaking, to you on a personal level, I think you should, instead of jumping in and doing credit spreads, even though you could. I taught at the time, a few years ago, when my daughter was 14, I taught her how to do the SPX system. I showed her, pull up the options chain, do this, do this. So, a 14-year-old, I was able to teach her the basic rules. I would recommend, Patrick, that maybe you just start off and go to VectorVest, and we have a $9.95 trial for 30 days. It'll come with a little quick start course on how to become a better investor, how to be a good investor on just stocks, and start there, and just start going through some of our tutorials. I'd hate to just say, hey, Patrick, you have no experience in the market, jump in and spend $900 on a course. I know it's bad for sales, right? Patrick, don't buy the course. But I really would recommend go to VectorVest, spend $10 on a 30-day trial, and just learn how to invest in the market. Frederick says, I'm in. Welcome, Frederick. Rob, we don't have another session later today. I will be holding an encore tomorrow. All right, I'll be doing it live again tomorrow. That's okay, Michael. One thing at a time. If you're already committed to doing one thing, focus on that one thing and get it right. Todd, you sent us your email address. John, could you look up Todd's account in our system to see if the email addresses match up? Thank you, Anthony. Says great presentation. Appreciate that. All right. Najendra says, I just bought. Welcome aboard. Philip says, enjoyed the training. Thanks, Philip. Ian lives in Canada, says, in Canada, you're not allowed to sell options in any registered accounts, RRSP or otherwise. Lou, I can't look into why the order is not going through for you. I'm going to flag this one for my teammate John. Maybe he can help out. Jim, I can't speak for which brokers do what. All right. Think we've come to the end of most of the questions. John Marie says, just registered, received my email confirmation. Welcome aboard. Daniel says, just signed up. Great to have you. David, if you're brand new to VectorVest, I believe we give the 15-minute delayed version during this course. And Tom C. Wanted to retake the course. So John, if you could, can you get Tom C his information? And Dwayne just typed in in. I'm going to put a little flag here for you, John, on Tom C. All right. Well, folks, it was a pleasure having you on today's webinar. Hopefully you learned a lot. Even though at the end I introduced a course. Some people sometimes say, "Oh, but you had a course sale at the end." I say, "Well, does that mean the whole 55 minutes that we spent prior to that was a bunch of nonsense? You didn't learn anything?" Anyway, so hopefully you learned a bunch in the first 50 some odd minutes, and we look forward to having you in the course. Like some people are still typing in, "I'm in." Lou, welcome. Thanks, Rodney. Says great job as usual. Just made a payment. Says how. Great to have you on board. All right. Look forward to seeing you in the Facebook group if you joined. And if you need any help with anything, there should be, let me pull up our website. Let me refresh our site. There's usually like a chat box on the site. Let me see if it's there. I don't see the chat box. Maybe it's full of chats. But if you go there, on the chat box, when you click on register, you see it still says fast action bonus. It'll stay there until we're done. You sometimes will see a little pop-up that says chat. Use that whenever possible because sometimes our phone queue could get a little backed up. And how? The Facebook group will send you a confirmation email with a link to it. And just click on that link and you'll And then when you're on the Facebook page, just click join and give us about 24 hours to get you in. All right? Everybody, thank you for being here with us today. Todd, thank you for typing in that you just got your confirmation email. Fantastic. Rob says he's coming in. Great. Better late than never, right? Great to have you all in. Look forward to having you in class and seeing you on the Facebook group. All right. Take care, everybody. Bye.